IMDA for providing us the stage so that we could reach out to corporates along with Volkmar and Agast to showcase how could a combination of Validus along with Agast and IMDA bring a solution to supply chain financing and assist corporates like yourselves to enable faster payments to your vendors, to enable better cash flow management for the corporates themselves. Uh, I understand we have limited time, so I'll try and restrict my discussion to the more relevant pieces for this webinar. So as some of us would be aware, Validus is a 5-year-old company. We are incorporated in Singapore, but we have a presence in 4 countries in ASEAN, which is Indonesia, Vietnam, Thailand, and Singapore. We are registered by the Monetary Authority of Singapore and Indonesia, OJK. We are backed by highly reputed VCs and partners. A quick look at our timeline. We started sometime in 2015, in the mid of July 2015. Over the last 5 years, we've built up a very steady base with a very technologically advanced platform, a strong credit algo, a strong fraud algo, which has been augmented by experts from the different banking and technology industry to come together, and we've managed to craft partnerships over the last 5 years with large corporates like yourselves, with Monetary Authority of Singapore, as well as large banks and financial institutions to enable supply chain financing to the SMEs within Singapore as well as in Indonesia and Vietnam. Our presence in Indonesia and Vietnam started in 2019, and Thailand, we are about to go live in 2020. Moving forward, as you see on the left side, we do have very strong equity investors of the likes of Vertex Ventures from Temasek, the Theodore Rekmat and family in Indonesia, Vina Capital from Vietnam, and Siam Cement Group in Thailand. What we do very differently is we have a partnership-led strategy where we partner with corporates like yourselves. And over the last 5 years, we've managed to build numerous partnerships across our network with not only private corporates, but even government-linked corporates and blue chip companies. What we essentially do as part of our partnership program is we provide pre-approved supply chain financing to all your vendors and contractors. When we say pre-approved, it means only KYC and no credit assessment. In Singapore, a large part of the problem happens to be the SMEs do not have very good financial statements and audited books of accounts. A pre-approved program really helps the SMEs to get easy financing within a 48-hour turnaround time. So the first question which comes is, how does Validus provide a pre-approved financing? So along with our data, technology, and marketing teams, Validus has created an internal technology solution. We have our internal fraud algos and credit algos, which help us to take credit decisions and provide pre-approved financing and give approval decisions within 48 hours. So that's been a key differentiator from what Validus does as compared to the street. To give in terms, some sense in terms of our depth, we engage with more than 20,000 SMEs on a monthly basis in Singapore alone. If we add this to the region, the number is much larger. Our first product when we do a partnership is to start with invoice financing, and that follows with purchase order and working capital loan as cross-sell products. These are pre-shipment products, which are typically after we've seen a couple of cycles of invoice financing and some payment track record between the partner, as in the anchor, and the SME. We've also managed to forge partnerships with large banks, GBiz, Zero, Prudential, so on and so forth. Moving forward, just a quick look at the numbers. While these numbers may not be real time, but we've done close to $600 million in disbursals now with SMEs in the markets which we operate. A large part of it sits with Singapore being our oldest geography. The key thing to note on this slide is our approval timeline is 48 hours, which from a traditional lender perspective is typically 4 to 6 weeks. We've disbursed more than 18,000 facilities. And another key point to note is 90% of the borrowers who come to Validus end up staying with us. So a very high retention rate when it comes to SMEs, which shows the confidence they have in Validus and the customer service which the SMEs get once they get on board our platform. This is a slide which is the bottom line of why a supply chain financing is required and why do the vendors and contractors who work for your corporates need financing. So they need financing for operational expenses and supplies, maintaining short-term cash flows to pay workers on time, purchase of upgrade of equipments, upgrade and maintain their processes and services, and even to take larger projects. Now, one of the things we've observed in Singapore is payments happen to be in progress basis. So a corporate like yours could be receiving a payment from a government body or from your client, which may come in 5 months, but you need to make your payment to your vendors and contractors in 3 months. So what we call it in the supply chain language, there is a mismatch in your receivables and your payables. So the solution which Validus brings in is without having any recourse on the anchor, which is the corporate yourself, without having the corporate to take any additional leverage on your own balance sheet, we can provide financing to your SMEs and you end up paying Validus whenever the payment term you get your receivables from your client. So we turn up as a bridge financing between the anchor and the contractor of the anchor. Moving forward, the key challenges with SMEs face today, if they need to go for standard traditional methods, they are quite lengthy, a large amount of paperwork, where the SMEs are single man shop or two directors. If they need to be completely involved in the long, lengthy procedure, cumbersome paperwork, it takes away their focus from their core business. Validus comes in within completely online process and a quick turnaround time to defeat this challenge. The second, traditional ways of lending require collateral and it's not unsecured. The challenge with SMEs in a market like Singapore, a lot of them are service oriented. There is no collateral to place. Validus provides a completely unsecured lending proposal to the SMEs, and this is done on the basis of relying on surrogate data and alternate data to come up with a pre-approved program for these SMEs. Our product suite today is very sophisticated, catered to the needs of the SMEs. So we don't have an elimination criteria in terms of having higher amounts or longer ticket sizes. We know SMEs need financing only when they need it. So, and cost of idle capital is very high. Unlike traditional lenders where the loan ticket sizes have to be higher or the tenors have to be longer, in the case of Validus, they are customized to the needs of the SME. We are a bank plus shop, which means we are marginally higher than banks, but we are not money lenders with very high interest charges. What we only charge is interest rates and disbursement fees, and there are no hidden charges of the likes of a lock-in period or a minimum quarterly fee or a facility fee or a loan insurance scheme fees and so on and so forth. So it's technically a virtual credit card which is given to you, which you pay as per use. Moving forward, a very critical slide for the corporates on the webinar today. The first differentiator which Validus brings in is we have no legal liability on the corporate if the buyer or the corporate wishes to set off claims. So our loan agreement is restricted only between the contractor and Validus with no legal liability of the corporate. The only arrangement between the corporate and Validus is to redirect payments to Validus instead of making the payment to the corporate as and when the payment is due. That's a very big differentiator which absolves corporate of any legal liability in the event of set-offs or in the event of any credit notes. Second, we do not require you to change your existing processes. We try and adapt to processes which are at the corporate anchor. We do not have any kind of technology play to start with. As a pilot, we are happy to work manually with the corporates. We do not require a change in batch processes. What it also helps is a reduced follow-up of the vendors with the accounts payable team. Because you've brought in Validus as a partner who can provide either advances or an early payment of their invoices, the contractors stop reaching out to your accounts payable or your finance team for an update on their invoice payment status. What we also provide is a payment reconciliation service to the partners. Over the years, we have seen a relationship between a corporate and Validus, along with benefiting the SMEs for supply chain financing, has helped strengthen relationships between the anchor and the supplier. It helps to mitigate risk in terms of better quality of service because the SME owner is now focused on completing the job than his focus being on finding sources of funding. We've also seen over the years, because of improved performance, the vendors are able to reduce their quotes to the anchors, or the anchors on the other hand can ask for renegotiation of contracts because it's because of the anchor that the vendor has managed to secure cheap funding. It manages regulatory risk because, especially in service oriented industries, it's very critical that the levies and the salaries are paid on time for the foreign workers. With Validus coming in as a partner, there is no added leverage to the treasury of the corporate, and Validus pays the advance to the contractors so that they can make the levy and payments and the salaries on time. And last but not the least is providing some kind of a referral fee to the anchor. Now, the referral fee is more in terms of a bottom line addition to revenue, or they are also to bring down procurement costs. Because to enable the entire process, the corporate may need to assign 1/20th or a small portion of a time of an individual who would work with, with Validus to get the arrangement moving with the SMEs. And this would really help in a very big way. The small percentage of the disbursal fee which Validus earns, we share it with the anchor to cover such costs. So that's a key slide which covers why a corporate or an anchor should consider a supply chain financing program with a combination of Validus, August, along with support from IMDA. It's a completely win-win proposition. We've already gone through it, wherein the corporate anchor has a number of tangible and intangible benefits, and for the vendor or the supplier, the benefits are quite obvious in nature. In terms of which are the companies which qualify for the anchor to be an anchor, we've just listed down certain parameters. The key parameter here is that the anchor needs to have local supply chain. In Singapore, as per the law, we are only allowed to lend to SMEs who are incorporated and registered in Singapore. So if a corporate has a supply chain in Singapore and they have to make monthly payments to their vendors and suppliers who are based in Singapore, we would be happy to come in along with our partners to provide a supply chain financing program to your ecosystem. One of the key things as well, in addition to the metrics which you see on the slide, is the success of the program depends on identifying an internal champion within the corporate whose KPIs are linked to the success of the program. In every anchor which we've worked with, we've managed to identify a single point of contact, or an SPOC as we call it, whose KPIs are linked to ensure that this program takes off and the vendors and contractors are provided financing on their invoices within 48 hours. There are few sectors and industries which we consider as exempt, which are oil and gas, commodities, trading, and precious metals for the obvious reasons. So in terms of products, we provide 3 products. Invoice financing as a starting product, wherein we give up to 70 to 80% of the value of the invoice as the loan to the vendor. Our tenor ranges from 1 to 5 months. Interest rates start from 0.8% per month with a very small disbursal fee, which is charged to the vendor on the loan value and not at the invoice value as charged by the competition. We agree upon the program with the anchor and we do not negotiate any interest rates or the economic parameters of the transaction with the vendors. That's the beauty of program-based financing. It's a cookie